Hello and welcome to the Masterclass. Today we're going to be talking about real estate investing for healthcare professionals. Hi, my name is Savannah and I am a registered nurse. And before we get started in the presentation, I'm just going to take a minute and tell you a little bit about myself and how I got started investing in real estate. First and foremost, I'm a nurse. I've been in healthcare almost 10 years now. I've worked in so many different settings from med surge to GI lab, cath lab, non-invasive cardiology, really almost every department in the hospital. My more recent years in the hospital have been in administration, healthcare leadership. I got my master's degree in nursing leadership and admin, and I had always had my eyes set on becoming a CNO, a chief nursing officer of a large healthcare organization. And I was down in SoCal in Los Angeles climbing that corporate ladder up until 2020 when I had my second daughter, which is why I put this picture here. It was really about this time that my husband and I started looking into real estate investing and educating ourselves on it. So we didn't have any prior experience or background. We didn't know anyone investing in real estate. And so we did a lot of educating ourselves, but more importantly than that, we were so motivated because we had a very strong why. We really wanted more time freedom with our daughters. We wanted to get out of that 9 to 5 W-2 rat race. And that is really what motivated us to co-found Willow Investment Group. So that is our real estate investing company. With that, in the first 6 months that we started investing in real estate, we acquired 38 units. So 2 single family homes across the country in Atlanta, Georgia. We also purchased a 12-unit apartment complex and a 24-unit apartment complex. Really quickly in our first 6 months, we were motivated. And since then, I've raised over $4.5 million from healthcare professionals who were wanting to partner with us in these deals. So after we gained some traction, people were wanting to partner right alongside us and achieve some of the really great returns that we're earning on our buildings. I also have a lot of investors approach me who want to learn how to do it themselves. And so I've coached dozens of healthcare professionals into their first real estate investment for the ones who want to take a more hands-on approach. And with the freedom that real estate investing has provided for my family and I, both my husband and I are out of our full-time jobs. I still work part-time in the hospital a couple days a week, but I do focus the majority of my time and energy on my startup, Invest Health, which I founded last year. So let's get into real estate investing. So a high-level overview of what we're going to be talking about today. So the goal of real estate investing, what we hope to achieve there, cash flow, multiple streams of income, that time freedom. Then we're going to talk about syndications because this is how you can passively invest in these real estate deals as a healthcare professional. And I want to show you what that looks like, the partnership breakdown, the risks involved, and the legal structure. Then we're going to talk about how you make money in real estate. So what's the difference between forced and organic appreciation, what the value add model is, like how are people making money in real estate, what that looks like. And then we'll look at the actual return. So cash on cash return or the average annualized return. This is the number you'd want to compare to the stock market, the ROI or return on investment. And then once you're completely sold on real estate investing and you know you want to do it, we're going to talk about where to find the money to invest. So a lot of different opportunities here, self-directed IRAs, home equity, and life insurance policies. So we're going to get through all of that in 30 minutes. And before we get into the nitty gritty, I want to highlight the goals of real estate investing. So first, I want to acknowledge that everyone's financial goals look very, very different. My goals for investing in real estate was I wanted more time freedom with my family. Someone who's maybe just graduating high school, wanting to get into real estate investing, brand new nurse, they maybe want to house hack or they're looking for cash flow, looking for ways to grow a portfolio. So everyone's goals and motivation is a lot different. But what the 3 most common themes that I see for people wanting to invest in real estate, number 1, cash flow. So how you achieve cash flow in real estate is really quite simple. You have a mortgage on a property. that you pay every month with some additional expenses. You have a tenant in there that you're collecting rent. So the income that's coming in the building, what the tenant is paying, or any additional sources of income, it could be laundry, parking. We'll kind of talk about a lot of that later. But the income minus the expenses, after that is the cash flow. So any money left over, that's the cash flow, the money that's going back into your pocket every month. Another huge opportunity that we're looking at here is multiple streams of income. So especially with healthcare professionals, a lot of them are invested solely in their 401k, their stocks, bonds, IRA accounts. This is a great way to have multiple streams of income, to diversify your investment portfolio, and to have passive income coming back into your pocket every month. So unlike those 401k accounts that you can't touch until you're 59 and a half, when you invest in these real estate syndications, that's cash flow, that's extra money that's coming back into your pocket every quarter, that you now have the opportunity to do whatever you want with it. So a little bit more flexibility there, which is awesome. And then lastly, time freedom. So when you have additional cash flow coming in and you have multiple streams of income, then you really get to stop trading time for money. You're now putting your money to work for you, and it creates more time freedom in your life. I have seen this pay off in my life tenfold. I mean, 5 years ago, I didn't even know anything about real estate investing. And within a handful of years, I've been able to create a lot of additional cash flow, many multiple streams of income, and a lot more time freedom in my life. So definitely very achievable in real estate investing. So now, before we dive into real estate syndications and what those look like and how we earn money there, I want to talk about the difference between actively investing in real estate and passively investing. So I have a lot of people who come to me and they've discovered real estate investing. They see all the opportunity, they understand logistically how it works, and they're all in. But they don't know what to do. They don't know what to invest in. They don't know what to go buy. They have some capital. And this is where I really encourage you to sit down and decide whether you want to be active or passive. So if you're playing an active role in real estate investing, it's going to be a bigger time commitment. This really requires a specialized skill set to go out and learn how to acquire these buildings, get the financing, implement the property management, do any repairs and renovation. You're also dealing with the 3 T's: tenants, toilets, and trash. So this is a term commonly thrown around in real estate investing that as landlords, those are now your responsibilities. And these are honestly some of the biggest deterrents for people investing in real estate. So this is why I do this presentation, because I like to highlight that there's a way that you can passively invest in real estate. So say you're sold on real estate, you want to get invested, but you don't have the time to commit. You don't have the energy to go out and learn a completely new skill set and how to evaluate markets. And you definitely don't want to deal with any tenants. You can invest in real estate passively through the syndications, which we'll talk about in a little bit. But these are really great for working professionals. I mean, healthcare professionals who are making good money at their job, makes more sense for them to go into work, take the extra money that they're earning, put it towards these real estate investments so that now they're growing wealth in their sleep. Also, a very low risk tolerance. So I'm sure everyone's heard horror stories about the real estate deals gone wrong, or flips that have costed 10 times more than they originally anticipated. Investing in real estate syndications is really low risk to passive investors. You're not signing a loan. You're not obligated on the loan repayment or anything like that. If anything faults with the property, not a lot of responsibility in managing the investment or forcing the returns. You leave that up to the operators. And it's a really hands-off opportunity to jump in these deals. So now that we've kind of differentiated between active investors and passive investors, so say you're leaning more towards that passive investor route, like you're a busy healthcare professional and you love your job, or maybe you don't love it all the time. That's why you're looking at real estate investing, but you know you can make good money there and you're looking to passively invest in real estate. So here in comes real estate syndication. So what is a real estate syndications? So this is when a group of investors, both active active and passive, combine their resources to purchase a real estate asset that they couldn't really buy on their own. And the cool thing about these syndications is that the complementary skills, education, and resources come together in a pool the resources together to create a greater than the sum of its parts. So when you start investing in these multifamily deals, commercial real estate, in the multiples, there is a lot less risk and higher returns. And we'll go through that mathematically in a scenario coming up. I'll show you some numbers. But really why this is the perfect opportunity for passive investors and active investors is it gives the active investors, or also known as the sponsors or the general partners, they have the skill sets to go out and make a lot of money in real estate, but they don't have all the capital to go out and buy an apartment and complex on their own. So this is where the partnership is perfect between a skilled sponsor and a group of passive investors, because now it allows the investors to passively invest in own real estate without the day-to-day hassles of managing a property. So this is really where the perfect relationship exists in these syndication deals. So how does a syndication work? So really what how logistically how syndication works is the apartment complex is purchased in an LLC. There's a legal document that contains all the information regarding this, which is a PPM you'll hear in the space. But basically, an LLC is formed in the name of the apartment complex, and each partner in the deal owns a percentage of that LLC. So the limited partners in the deal, they're given ownership shares in the entity based on how much capital they're bringing to the deal. So if you look at this graph over here, you can see general partners earning about 20% of the deal, and then the different passive investors in the deal each own a different percentage based on how much capital they're bringing to the deal. So if you have passive investor 5 that's only bringing maybe $50,000 to the deal, and then you have another passive investor who's bringing $100,000, and so you can see they're going to be earning twice as much returns. So the deal sponsor, the general partner, they're responsible for executing the business plan. They manage the property, they manage the investment, they do all the communications and the returns. And the passive investors really just sit back, collect the quarterly checks, and then at the end of the predetermined hold time, whatever it is, I'll go over a scenario. The sponsor will sell the asset, and then each investor's initial investment is paid out in total, and then the additional proceeds are split amongst the partners. So now we're going to talk about really how we're making money in these deals. So we're going out in our investment company, we purchase really rundown value add opportunities. So in value add opportunities in real estate, you can force appreciation in the deal. So if anyone doesn't know what appreciation is, say you bought a house for $300,000, a year from now, it's worth $400,000. It has appreciated $100,000. And that's really equity that you have in the deal. You can tap into that in different scenarios. But that's how you make money in real estate, is through that appreciation. So in these value add deals, you can force appreciation by going out there, finding mismanaged apartment complexes and essentially flipping them over a 5-year period. That's really the goal in most syndications. These value add deals, looking to flip these apartment complexes and cash out investors along the way. So how do you force appreciation into these deals? So different ways that you can increase rents. You can add in supplemental income like laundry, storage, pet fees, parking. And then there's also a huge opportunity to decrease expenses. So decreasing some of the utilities, landscaping fees, maintenance and repairs. Just to give you an example of some of the deals that we're looking for. So the majority of our deals have been from really motivated sellers. Maybe they've owned the building in their family for decades. It's sitting on the back burner. They have a lot of other different priorities. And this specific apartment complex isn't really operating to its fullest potential, meaning the rents aren't up to market value. There's maintenance items. The roof is messed up. The windows are in bad shape. We had a building up in Oregon where the water expenses were like double what they should be. And we went in during inspection and saw all the showers leaking and the water faucets leaking. And we went in and implemented a water conservation program, entered in new aerators on the sinks, water conservation shower heads, toilets, and drastically dropped that water bill, decreasing the expenses. And then also because we're going in there and taking care of the repairs, maintenance, we're adding value to the building, and it allows us to raise rent. So a lot of opportunity to go in there and force appreciation in these multifamily deals. So now we're going to look at a scenario of what that kind of looks like with the numbers. So looking at this, to make it easy, I did some simple math: 100-unit apartment complex. So this one on the left, it's rented out for $600 a unit. You're generating $700,000 a year. Your expenses are about $400,000. So your net operating income is $300,000. So that's what you're left with. So now I want to touch on briefly about what a cap rate is. So a cap rate in multifamily real estate is how the properties are evaluated in terms of their value. So in single family homes, their value is determined on market comps. So your value of your home is based largely on the value of your neighbor's home. That's how single family homes work. In multifamily, the value of a property is determined on how much money it's making. It's determined on the revenue, the net operating income, and then the cap rate, which is based on the local area. That's how we determine the value of the property. So looking at this example on the left compared to the right, that same 100-unit complex, say we go in there, we implement some water conservation, it allows us to raise rents up slightly to $770 a unit. We decrease expenses about $50,000 a year. Now you can see the net operating income is $550,000 a year. And because of the power of multifamily and doing repairs and renovations to a large building like this, you can see how the value is almost doubled. It was a 4.2 million before, now it's 7.8 million. So huge opportunity in these multifamily deals for operators to come in, add that value, force appreciation, and cash out passive investors along the way. So now that we've kind of talked about how money is made in these deals, I want to show you guys an example of what the returns look like in these deals. And I've done them based on some of the deals that actual numbers from my deals. So like I said, we're looking to flip apartment complexes over around a 5-year period. And in that, our biggest goal is to double our investors' money. So 100% return on investment. So if we have an investor bringing $50,000 to our deal, we want to give them the $50,000 back plus another $50,000 on top of that. So this is kind of what a value add deal looks like. You can see cash flow in year one, that green highlighted number. It's a little bit lower to start because we're in there. The rents might have been 30% below market value. So we're going in there, we're having to do a lot of work. We're not collecting optimal rents, but then you can see each year this progresses so that we're getting more and more rents. Now, I want to highlight that the biggest return comes at the sell of the building. So you can see here, year 5, when we go to sell the building, that's when the investors get their return of member capital. So say that $50,000 investment, they're getting that $50,000 back plus another $33,000 on top of that. So overall return on investment over 100%. The average annualized return here is over 20%. This again is the number you want to compare to the stock market, which historically has performed at about 6 or 7% year over year. So you can see by investing in these syndications, it's a great way to potentially double or triple what you could be potentially making in the stock market. Also cash on cash return at over 7%. So this is kind of what projected returns look like in a syndication deal. So now let's say you're sold on real estate investing. You definitely want to invest passively in a syndication deal, but you don't know where to get the money to invest. Now, a lot of healthcare professionals don't know this, but When you leave an employer, you have an old 401k account just sitting there collecting dust. You can go in usually with a click of a button and convert this into a rollover IRA that you can then move into a self-directed IRA, and you can use that to invest in things like real estate. So I did this at one of my previous employers. I was working at Sutter Health. That we had Fidelity. I left that company. I took my old 401k account and really, literally, with the click of a button on there, moved it into a rollover account. And then at that point, you can move it into a self-directed IRA. So really a great way for investors to have more ownership and control over their money. You may be thinking, why have I never heard of this? Or a lot of things, maybe when you get into the space, might seem a little bit sketch, but really you don't know about it because maybe it's not in your network or people aren't openly talking about it. And honestly, it's because a lot of people don't want to take a proactive approach to their finances. They would rather set it in a 401k account, the stock index exchange, and let someone else manage it. But if you're more savvy, you know that you want to use this money invested in real estate, there's huge opportunities that you can tap into different capital in your life. So moving now into home equity. So a lot of people are sitting on gold mines in their home, literally with equity that they have that's come from past appreciation. So this is something that I did personally when I got started investing in real estate. So I was sold on it. I just didn't have any money to start investing. And it was talking to a really good lender that made me realize that I had equity in my primary residence. I was so new and novice to real estate investing at this time that I didn't even know what equity was or what you could do with it. And then when he was explaining it to me that you could tap into it through a loan, like a HELOC or a second mortgage. So I had $100,000 in equity. I took it out at a 4.3% rate. And then I'm using it in real estate investments that are earning me way higher returns. So not only am I able to pay off that loan every month, but now I'm getting huge amounts of cash flow back into my pocket every month because I leveraged that capital. So leveraging money is a huge way to build wealth. And something that's honestly not taught enough, not how to do it correctly. Life insurance policies are another great way to tap into different capital. I've had a lot of investors jump in my deals through different loans that they take out on life insurance policies. Very similar to a HELOC. You could do it like a 4.5% rate. Use it. That's getting you something 20% average annualized return every year. Really a no-brainer. So those are a few different options that I've coached a lot of healthcare professionals into doing. I have a lot of different resources on all of those. So if you need a little more help here, please reach out to me. I'm going to be sharing my information at the end, but huge opportunities here to leverage the money that's already existing in your life to go out and use it and put it to work for you in these investments so that it's compounding and building wealth over time. So now what is next? So say you're completely sold on real estate investing, and you want to get into one of these syndications, like what do you do? How do you get started? So first off, you're going to want to find an operator or syndicator, someone like myself who's going out there and buying these apartment complexes, and start the conversation. Ask them what kind of deals they do, what their track record looks like. Ask them if you can talk to any of their existing investors. I let new people talk to my existing investors all the time because I feel like it gives people a really good insight into how I communicate and what they think about the investments and what their experience has been. And so you want to initiate the conversation, establish the relationship, and then jump on an email list. So that's really the best way that you can get in touch with operators about upcoming deals that they have, because then you get to step 2 and you're waiting for a deal. So say you've already found the capital in your life, you have it ready on standby, ready to jump in these deals. At this point, you're just waiting for your sponsor to have a new opportunity. These deals are very large. They take at minimum 90 days to complete. So even for the last 3 years, we've done about 2 to 3 deals a year. So there is a little bit of lag time in between. But with that, in that lag time, you want to be attending investment presentations or engaging in different Facebook groups or virtual meetups. There's different ways that you kind of can stay up to date as you're waiting. And then you say you find a sponsor and there's a deal and you want to jump on it, you found it, you found what you want to invest in. I always recommend to talk to your CPA first. Let them know that you're wanting to invest in one of these type of deals. There's different ways that you can kind of offset some of that tax burden, especially by investing in real estate, and including your CPA in the conversation sooner rather than later will only set you up better for success. So then at that point, you do want to verbalize a commitment. You complete some legal docs. It's pretty extensive paperwork, but nothing more than you sign for your 401k or any other type of investment. And then at that point, you just wire the funds. And then step 4 is just sitting back and collecting your returns. So as a passive investor, all the work is really done up front. So it's vetting out that operator is really your biggest responsibility as a passive investor in a syndication deal, is making sure you're trusting who you're giving your money to, making sure that their business strategy is sound. Did they evaluate the market where the property is? What does the business strategy look like? What are the projections? So looking into that, that's the majority of your upfront work. By the time you get to step 4, you're sitting back, you're collecting your quarterly updates and your returns, and telling everyone you know that you're a real estate investor because you are part owner of an apartment complex, which is really, really cool. So now, before I end it, I do just want to reinforce to everyone, remember why you're here. So if you signed up for this presentation, this masterclass, if you're watching the recording after, you're interested in real estate investing for whatever reason it is. You think it can provide more cash flow, some time freedom to your life. And I can tell you hands down, the people that I know that are investing in real estate are getting more cash flow, more time freedom, different streams of income. There's so many opportunities and different ways to generate returns and income in real estate investing. And especially in these real estate syndications, it's a great way to jump in the real estate game without having to do all the work. You can be a passive investor in these real estate deals and let someone else take the reins. So whatever it is, I want to encourage anyone who is watching this that take action, get really clear on your goals, where you want to go, and then take a step forward. Call whoever you need to call to, set up a meeting with a syndicator or operator, send that email, get on that email list, reach out, network in the space, whatever it is, just take action towards your goals. And with that, I just want to leave some of my information here. I love chatting with people who are interested in real estate investing. If you're a healthcare professional and you're trying to decide if you want to be active or passive, you don't know, I'd love to hop on the phone with you. I can talk through a lot of different options with you. I think as a newbie starting out, your biggest hesitance is not knowing what you don't know, and having someone to just kick around ideas with and be a sounding wall. I am more than happy to do that. I love talking to nurses, other healthcare professionals. It truly is the reason behind everything that I'm doing at Net Worth Nurse. So you can find more information about me and my real estate investments, what type of deals I do at networthnurse.co. And if you're interested in my startup, Invest Health, I have that website here as well. But so happy to have you guys join. Very excited to meet you, and please reach out.